But he agreed with me. So,
Oh.
Hello, Joe.
Hey, buddy. How you doing today? Enjoying this New England fall weather we have?
What the fuck? Rainy and cold. I feel like I'm in Seattle.
I know. It's beautiful, though. It's like 65.
It is a nice temp. It is a nice temp.
So I pulled out a little.
It's good.
Because I'm shivering down here at 65. All my windows
So,
are up.
hey, my buddy at Fran from Superfluid is going to be in town after ETH Denver, so we can meet up with him. So we were chatting back and forth. They did a great job on handling this whole exploit, and they put up their postmortem today on Twitter. They just did a precision level job handling it. And, just like anything else, they pulled in experts from the outside. So they pulled in Bantek, who's a security expert. He immediately identified the vulnerability in the smart contract. They deployed the fix. And it's a bad thing for the projects, but it's a good thing in general that the actual impact of the tokens that were taken is on projects that use Superfluid as their payment mechanism, right? So the tokens that were lost were project tokens primarily, and then ETH and some other tokens. The value was high, but at the end of the day, they were able to work out compensation. So they compensated 80% of the wallets that were affected, and then the other 20% represent the largest amount of money, and those guys have worked out an agreement for payment over time to compensate them for the loss. Bug is fixed. The system's secure. They're going to do more audits now than they had already done. And, I'm hopeful for them because I don't want them to take a big hit from this, because I think that tech is so important, not only to DeFi, but I think it's really important on we talked about it yesterday, the use cases and why it could be really critical for payments in general.
The continuous streaming of pay. I mean, that's brilliant. So, every community needs to get on board with this and help them. It sounds like they already got it figured out, but engage in their communities, Telegram, Discord, potential clients, anyone that wants to get paid, right away versus waiting, 30 days to get your money or 14 days. It's a pretty cool thing. And then again, like you said, it smooths out all the volatility of account balances and capital available to pay mortgages, rent, tuitions, whatever, food, car payments, insurance. So very good thing. Good guys. I'm definitely looking forward to meeting them. Another thing real quick, the guys that are working that project, that NFT project in El Salvador, that real estate development deal, that deal's almost, I think it's inked or it's close to being inked, but they're going to launch at the BTC Miami conference in April. And so we have to make sure we get to there. But they're looking for people that are heavy hitters in that space that, where they can get them on the main stage and stuff like that. So we need to talk about that a little bit, who we know at that conference and see if we can help them out.
Great.
But lots of good people coming to Miami, it sounds like.
Yeah. Well, look, I mean, we're becoming the center of the universe. It's, to some extent for DeFi. So today, real quick, we've got Alex from Eureka joining us. And Alex is not here except to talk briefly about Eureka. He's here because he has years of experience as a market maker on all the major centralized exchanges, including being a major partner with Binance, has a full team of developers. And he formed Eureka to make an impact from a market making perspective, arbitrage perspective in the space, and to kind of alter the way the ohm forks and the APYs in the space are handled. So really looking forward to hearing his thoughts on the current market conditions. We're seeing, some nice moves by Bitcoin and Ethereum today, and things are looking good and looking up right now. So anyway, really cool. Looking forward to talking to him. Did you see this piece? U.S. Treasury basically saying banks need to take over stablecoins.
I didn't see the latest one. I heard somebody else saying that another government person or JP Morgan type saying that stable coins are not the future. So there's a whole, like you said, what does this one say? What is this?
This one basically says the Treasury is telling the banks that they need to control stable coins. And it's like, okay, it's obvious you people still don't understand this shit. Now, maybe they mean USDC and USDT, which they have the authority to potentially go after those guys because they've got backdoors and they're under regulatory compliance. But I can tell you what, Sam Kazemian's not going to hand Frax over to the banks. No. So anyway, I found it interesting that that's the Treasury is trying to tell that they really don't understand what's the hell's going on in this space.
I had some chats with the guy who's advising SEC on stablecoin policy. Off the record chats, and super smart guy. I mean, this guy is so bright. But I could tell they're looking at it from the standpoint of dollar competition. They don't really seem to understand how stable coins work.
Right.
And I wasn't really wading in because I was just glad they're thinking about it and talking about it. But I haven't read your article. I don't know what it's citing, but it was kind of like in that Federal Reserve paper that was out last week talking about stable coins, where they're encouraging the banks to develop stable coins is what I got, not to take them over. To have new ones.
So the U.S. Treasury said they are calling for stable coins to fall under the remit of federally insured depository institutions.
Yeah.
And Representative Jean Nelly Ling of the U.S. Treasury said, talked of policy concerns that included illicit finance, user protection, systemic risks, blah, 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 blah. And she said they are bank-like products as well as an investment-like product, and this has allowed them to fall into a regulatory gap. So in other words, give us a hammer, please.
Yeah, well, I think
go after them.
Yeah, I think it's going back to like corporate coins. You know, like when all those like Dutch East Indies Trading Corporation and all those corporations in the 15th, 16th century, 17th century, they all had their own money. So, or, they traded in some variant of gold coins, that was their stable coins. And so I think that's what everybody's thinking of, something like that. I don't see how it really works for JP Morgan to have a coin other than for internal stuff. I mean, it's a stable coin, but maybe they want like 6 or 7 of them at the big banks where there's actually physical dollars backing them up. Not, but again, look at Fort Knox. Is there really $32 trillion of gold sitting there? No, there's only $10 trillion of gold in the world. So how can it be enough to back up our GDP? It's not there.
Yeah.
So I think this is just not posturing, but it's aspirational. And,
I like aspirational.
Yeah. I mean, and maybe it's good, maybe it's bad, but I don't see how you're going to take out the existing stable coins, unless something goes.
Well, like I said, I think they can take, they could take out USDC and USDT.
Yeah.
And I think that's USDC's goal anyway, right? He just wants
get bought
to
by a bank.
He wants to be this. He wants to be the Fed's stablecoin. That's his goal. USDT is never going to get it. He saw that gap, right? Their history with their backing and all of their issues, they are never going to be the Fed adopted stablecoin. Doesn't matter. So USDC, on the other hand, has been kissing ass, right? They built it with a backdoor. They've done all the regulatory stuff. They've done, they're smart. They've done the cash transmitting, legal regulatory
money transmittal license,
money transmittal licenses. They've done all that. And I think and all of the big financial orgs that are getting into crypto are using them, right? I get it. And it's a strategy. The strategy is I want USDC to be the stable coin for the Fed for the United States. And so he's positioned them well for that. What I don't think they understand is that algorithmic stablecoins and other stablecoins, Bean, Frax, MIM, TUSD, none of those.
No, DAI is not algorithmic. Sorry.
None of those are going to be able to be under the control of a bank. So, it's silly. So anyway, that's that news.
Half the time though, just so you know, half the time when they put these kind of things out, they're just trying to stimulate market commentary coming back. And
maybe so. Yeah.
Hey, dude, that's not the way you do it. You do it like this. And I don't know why. I would never buy USDC if I was the Fed or the bank. I would just issue a new one.
Well,
Because
that's
why
what I
pay the
mean. They could
premium?
easily do that.
You don't need a money transmittal license.
Yeah.
The Fed.
But I'm sure his pitch is, look, we've already done all the tech, right? We have the infrastructure, we have the tech, we have the control. You can have a fancy dashboard. So, you know, when you need to print, we're here. You can just dump it in here, right? So Gnosis has announced that they already announced that they're spinning out Cow, MEV protection .exchange, their MEV safe swap as a separate project and token, and there will be an airdrop. And now there's a vote happening to spin out Gnosis Safe, which is their wallet product, as a separate entity as well. So it is likely to have an airdrop. I don't know if the votes occurred on this yet, but I got this from DeFi Airdrops that there is likely to be an airdrop of Safe token by Gnosis. Both of those tokens should do, in my estimation, do your own research. I'm not a financial advisor. My estimation, those are going to be two very important tokens. Gnosis, you know, literally controls probably, I don't know what the numbers are, but I would assume that 90% of the treasuries have a Gnosis wallet, and they are critical infrastructure.
Oh, didn't I? Oh, that's the number right there on your screen. It says like $100 billion or something in that.
Oh protocol? Yeah, 107 billion stored in Gnosis Safe. So, yeah, they are critical infrastructure to the space. Critical.
What is their what's their token symbol?
It will be Safe.
Oh, they don't have another one. Okay, got it.
No, this is the spin. I think actually Gnosis, the parent project, they also have their own blockchain, by the way, which hasn't had a lot of uptake, but they have their own blockchain as well. So, so I am.
Do you know what you got to do to get the airdrop?
I'm assuming have done business on Gnosis. Let's see what it says.
I was just, the reason I asked if they had a token was because usually you buy the token and you get the airdrop on the next one. So
yeah, I don't know if they've gotten into the details of how they are going to do the airdrops.
Let me see if anybody's commenting.
It says lots of airdrops to believers in Gnosis chain, which positions itself as the Kusama of Ethereum users who lock their. Oh, yeah, that's their existing token, GNO.
GNO.
Gnosis.
Okay, yeah. Cool.
If you lock, here we go. Users who lock their GNO for 1 year are entitled to 5% of vesting Cow tokens. That's their DEX, their swap, and future Gnosis Safe airdrop.
Oh, that's a great play.
Yeah.
I mean,
and blocking GNO for a year. I mean, if you've got the cash to set aside and you don't need it, that to me is not a dumb play. So,
well, if I'm willing to lock Geist and Blizzard for 90 days, I'll sure as hell lock Gnosis for a year.
All right. Exactly.
Yeah. No, that's cool. Good news, man.
Yeah. So that's cool. I don't know if Alex is going to join us. He's expecting him at 12:15. Hopefully we're still on track for that. But if he doesn't, I have plenty to talk about, especially a bit of a rant. We're going to pick a fight with a billionaire today. So
hey, that's fine, man.
Yeah. I found this tool. I think we've actually seen it before, but we really didn't dive into it. It's called yield.rodeo. I had no idea there was a rodeo extension in the domain world, but evidently there is. I don't know if there's like bull.rodeo, cow.rodeo, you know, I'm sure Peter will probably do a beating animals.rodeo or something. I don't know. Anyway, really fast, cool kind of tool for finding yields, similar to kind of like the multi-farms and others of the world. You can choose the coins you want. Oh, cool. We'll discuss this after.
Yeah.
Hey, guys.
Alex, how are you, sir? We're live.
Hey, Alex.
Awesome.
How are you, man?
Good. I'm doing great. How are you guys?
Awesome. Doing great, buddy. Doing great. Thanks for coming on.
Yeah, thank you for having me.
Excellent. I did a little bit of an introduction earlier. By the way, your episode's probably going to hit later this afternoon, just so you know. So we'll time it out for your appearance today.
Awesome.
Your Mission DeFi interview, because I am way behind schedule. So apologies. Alex is the founder and lead of Eureka, which we've talked about on the show before, which is a ohm fork on the Binance Smart Chain. But you're taking a little bit. So I wanted to talk briefly about this, and then we'll climb into markets and market making and all that. But I wanted to quickly let you kind of talk a little bit about Eureka and your philosophy around it and what you're trying to do, so people have a sense of it. Full disclaimer, I have my airdrop tokens, and I've also bought more that I'm staking with Eureka because I was so impressed with Alex and his approach when we spoke and I interviewed him. So Alex, tell us a little bit about Eureka, how it's going. I know you guys are still doing the distribution. You're not actively like pushing staking or making all that happen yet. You're just really kind of trying to distribute the tokens as widely as possible. But go ahead and tell us a little bit about it and kind of what your approach is.
Yeah, so Eureka is currently on the Binance Smart Chain, and we forked Olympus DAO. And the idea is really to, well, first of all, we are definitely going cross-chain soon, and
Awesome.
the general idea is to use the Olympus DAO kind of framework and really the tools that it provides to build a decentralized market making and quant trading operation. And people are very familiar with the concept of automated market makers and liquidity pools on Uniswap, etc. But very few people really understand what it means in a centralized exchange context, and even fewer get actually to participate in those kind of yields, and so that's the ultimate goal really with Eureka is to give a public access to those kind of opportunities.
So, sorry,
yeah,
go ahead.
And so at the moment, yes, we are in a distribution phase, and the next step is education and going cross-chain, and from there start like a small proof of concept environment where we show people what centralized exchange and market making looks like, and how we plan on like using the Eureka framework to kind of construct the operational side of that.
Awesome. That sounds great. And obviously you have years of experience doing just that, which obviously brings a lot of credibility. In terms of people that are staking in Eureka, when you say exposure to kind of understanding quant trading and market making, do you expect that the model will be that as Eureka rolls out investments into market makers and doing market making itself and quant trading itself, that that there will be profits coming back from that are going to the people that are holding and staking Eureka? Or have you guys finalized kind of how you're going to structure that?
So the idea is really we want to discretionarily peg the Eureka token price to the treasury. And so what we saw with Olympus DAO was that the token price completely decoupled from the treasury value, and later on that corrected, obviously, and so the staking in that sense is more of a sort of utility that rewards people who lock their tokens, and in turn stabilizes the treasury account, right? Because if people sell the token below backed value, that basically means we have to liquidate the treasury and buy back the token.
Right.
And so staking, I see it as a form of stabilizing that process, and in a very linear manner. In like traditional fund world, you have lockup periods and early redemption penalties, etc. And And here I think staking has a very similar utility, but more in a linear fashion rather than like hard limits like that. And that also means that if token price goes above treasury value, that we look to, of course, sell tokens to replenish the treasury account. And from the looks of it, I think we can tweak bonds to a degree that has exactly that effect for us later on.
So you guys are going to fundamentally kind of work the way the Olympus DAO system works to fit this model and utilize the core components and engines of it so that the token price is really tied to what, or value, I should say, is tied to the value accumulated in the treasury, so that those people who are investors in the platform are gaining from the work that's being done in market making and quant trading. Would that be a good way to summarize it?
Exactly. That's exactly it. And so we really want to avoid a Olympus DAO situation where the token price depegs like several 100% from the treasury, because that's just unnecessary volatility, and people who aren't like intricately familiar with the tokenomics, they paid a huge unreasonable premium at Olympus, like at Olympus DAO at the peak, right?
Right.
And I think that really hurt like the community momentum and overall like community stability.
Absolutely. No, I totally agree with you, and I think your approach will be eye-opening for people. I would encourage folks to follow your Twitter because you've put up quite a bit of good content related to quant trading and other things. I was trying to find your Medium post about APYs and kind of your philosophy about it. When I do find it, I'll post it up for everybody to go take a look at it, because I think it really embodies your approach to this entire project. You know, we're in a world in DeFi where people are aggressively wanting to see action happen next week, right, or last week. And I think after I spoke with you and I've read more about kind of your philosophy and approach to this, you guys are not rushing this, right? You're taking the time. You have skilled and quality developers that you've worked with for years that are actually trying to build something that can scale long term without crazy inflated looking APYs, and taking a different approach to how you build this out. And so your expectation is that you're not going to be like, you know, running and gunning here in 3 weeks. Your expectation is that you guys are going to build this thing the proper way, without kind of making a lot of big promises out of the gate.
So you can find our Medium at the bottom of our website. There is a Medium icon, and that brings you right to our Medium page.
Perfect. I should have like done that. It's not like I haven't been to a few DeFi websites. Okay, Joe, did you have any questions of him before we kind of get into the market and conditions? Oh, you're muted, Joe. That's kind of nice.
Sorry, guys. I didn't want to have any reverb.
Permanent.
No, I just joined the Telegram channel. Oh yeah. All right, smart ass. And I was just on your website. I think it's brilliant myself. I like, because we talk about this a lot. How do you stabilize the treasuries? You know, and different things like, you know, limit orders at the backing price already in place versus manually executing when it goes below it. And then I see the bonding and staking on your platform. You know, one thing I was curious about, because I get the bonding or minting versus buying on the open market. But do you have any thoughts about when the discount rate on the bonds goes the other way, when it's, you know, a premium purchase versus market, ways to equalize that other than just market buying? Have you thought about that at all?
So when bonds are cheaper than the market, you mean, or the other way around?
The other way around, when the bonds are priced at a premium.
Well, so if if bonds are priced at a premium, there's no incentive
Right.
to buy bonds, right? And
Yep.
and that in our model should ideally mean that the token price is below treasury value, and so that means we would liquidate treasury and buy back the token up till a point where it reaches the bond price again, and bond price being also in line with treasury value.
Yeah, that makes sense, because that's when we've talked about, forks and looked at a lot of them over the last. I mean, I think I started really looking hard maybe in October and jumping into a bunch and this is obviously experiments too. Everybody's trying to figure out the optimal configuration. I like your approach, since you're coming at it from a conservative standpoint, like rather than keep jacking up APYs, keep it in something conservative. Like, what is yours right now? I think it's like 1,100 maybe.
Well, no. So the interesting thing here, I just posted a bit.ly to his RAPY document, which stands for relative APY, right? So he shows kind of the standard Olympus DAO APY, but also they've added their relative
proprietary
APY.
formula.
Right.
Okay.
Right. Which is, obviously meant to be a more realistic. So right now our APY is at 418.2%, which nobody in the real world would sneeze at, right? Or they would actually probably take it. They would think it was still too much. We've talked to those guys. They want 12%. Show me 12%.
Yeah, we'll give them 12%.
Exactly. We'll take
the spread.
Take 406.
Yeah.
And you can keep the 12. Anyway, so it is on the site. They do talk about it. And then on his Medium article, it's a really good profile there of how they're thinking about it. And then I encourage everybody to look at the rest of the Medium posts. Alex, I didn't realize how many more posts you guys had done there. I got to catch up.
Yeah, it's cool stuff. I like this.
So everybody go check out Eureka, great Telegram group going on. They also have a Discord group. You can get those links at ureka.finance, ureka.finance. I put a bit.ly link on the screen right now. bit.ly /r-APY to see the article that I was referencing. Alex, so we've been kind of in a weird space with the market, and you've spent thousands and thousands of hours looking at charts and programming bots. Can you first kind of give people an overview of what it means to be a market maker, and then let's climb into your kind of thoughts on what you see in the market right now?
So at the very core, I think when you really boil it down, market making is selling risk. And what that basically means is the other side of our trades are, we try to have mostly people who take risk. And then from there, you can break it down in, well, what does that really mean? Well, the best, but also very complex abstraction is if you come from the options world, when you sell a put or a call option, then you also like sell risk in a very very direct manner, and when you place a limit order a certain distance away from fair market value, that's also a way of selling an option, right?
Right.
So you are presenting an opportunity for the market to lift your bid or fill your ask.
Right.
And that premium, that's ultimately your profit as a market maker. And once you got that nailed down, that mechanic of, well, I sell a bit higher than fair value and I buy a bit lower than the fair value, then everything around that is where the real challenge as a market maker comes in, where you have to be very nimble when the market starts to become directional. because imagine like the market jumps up 10% within a minute and takes out all your asks. Well, what does that mean? You're now sitting on inventory that got filled at, like, say, the first 1% of the move, and then it jumped up another 9%. And now you are stuck on, like, on this short position ultimately, right? Because the market maker always wants to be market neutral. And then you have to rebalance 9% higher and you lock in a 9% loss.
Oof.
And so that's like the main problem that every market maker is faced with on a daily basis as the market changes and as like microstructural regimes change. For example, there was this huge shift in how the market moved when Wall Street came into the
crypto
into the picture. Yeah, especially with the futures, and that kind of really stabilized the market in a positive way for market makers, because before that you had those very erratic moves that were leverage driven from the perpetual platforms like BitMEX, especially in the early days, where price would have those erratic 10% moves, and those are really, really difficult to deal with. And the less of those moves you have, the easier it is for the market maker. And so in that sense, it's now, I would say, there's less money to be made market making than before, but you lose a lot less when things go south as well.
That's good. Yeah, so the big money coming in has stabilized it to an extent. Obviously, not as much as traditional markets, but definitely more than it was, which makes the job of being a market maker a little bit safer, but also reduces the opportunities for kind of more extreme profits with the moves that go your way.
I think it also reduces the profit for like the usual crypto trader, because the market is a lot more random now, which is great for market makers. Like, and the randomness is more consistent. As inefficiencies get efficiently priced into the market, you basically end up with efficient moves on news headlines, and then following that, when there's no new information necessarily entering the market, you have a very consistent, very noisy market, which is almost impossible to trade discretionarily. And so it's way trickier to trade the current market moves, for example, than what it looked like 2 years ago.
And that's because you don't have like a news indication telling you, hey, this is going to happen. And so people would react to that. This is more kind of a guessing game for you about which direction things are going. Now, I assume you use tools to help you make decisions algorithmically, but it's still probably not an easy thing to deal with.
So a market maker tends to not make predictions, and it just looks at the current state of the market and position itself accordingly, and then react within microseconds on state changes.
Wow.
And so it's a very low latency game as well, because if you have a move on one exchange, then you can use that information and capture that within milliseconds, and for example, avoid orders getting filled on another exchange. And yeah, so in that way you adapt to state changes rather than making predictions, if that makes sense.
Yeah, so obviously if there's a dump starting on one exchange and you're market making on Binance, you see that data coming in. that allows you to immediately cancel orders or change them.
Exactly. Yes.
And react to them from that perspective. So that also probably requires, from an infrastructure perspective, very tight integration with the APIs of a lot of these exchanges, so that you're getting the data as fast as possible, I would assume.
Exactly. And once you reach a certain volume threshold, a lot of those exchanges will even give you whitelisted API endpoints.
Nice.
And that basically means you avoid the congestion that usually occurs during very volatile market moves. And yes, it is a bit of a, I don't know, questionable advantage if you're a very purist from that standpoint, point of view. But on the other hand, in the bigger picture, that advantage improves overall liquidity availability.
Right.
Because as the market maker is able to avoid direction moves, he's able to quote tighter and better liquidity when you are in those noisy sections.
Makes sense. Oh, and obviously the exchanges give you that because they want you providing that liquidity. It's critical to their business that people like you are there, acting as market makers.
Ultimately, it tightens the spreads, which makes it more affordable for the trader to execute, and that ultimately means you can trade more size, and that means more fees for the exchange and less slippage for the trader.
Yeah, it's interesting to me how many people will say things like market makers are manipulating the market, and kind of make that broad accusation that like they made the dump happen or they made the pump happen because they're leveraging it, whatever. Ultimately, it doesn't work that way, right? You guys are playing both sides of things, and so you can't. It's not something where any one market maker necessarily is doing a mass manipulation of the market just to profit off of everybody on the exchange.
I think that's exactly right. In the competitive high volume coins, I don't doubt that there's manipulation happening on low volume, high leveraged coins.
Sure.
Where, say, if you're the only market maker on a certain perpetual protocol and you get filled really aggressively on your bids, and you don't necessarily see a matching hedge on other exchanges, well, then whoever took that position might be naked, right?
Right.
And now you have all this inventory that if you wanted to, you could try pushing price up. Your inventory would go up in value, and you might liquidate the counterparty. And so that kind of
manipulation.
That kind of manipulation, I'm pretty sure it happens in the low liquidity coins with leveraged markets available to them.
Makes sense. Makes complete sense. From all of this time that you've been looking at these markets and making on these markets, do you feel like you've kind of acquired a sense of, I don't know how to say it. For example, when I'm constantly trading our mean reversion indicator, material indicators, I feel like I start to get a sense of the market from almost like an organic perspective. And I'm nowhere near as active as somebody like you who's constantly watching things. But do you feel like after all this time that you really start to get a sense of things that might be about to happen based on either data parameters and or gut feeling and everything else that you guys use in terms of automation and tools? Or is it something that you feel sometimes just as lost as everybody else, wondering what's next?
I think by far the biggest valuable lesson is just how much I'm able not to predict. If that makes sense, right? Just the sheer scope of unpredictability in the market, and really how tricky it is and how difficult it is to actually predict, and especially on the lower time frames. And of course, it is easier but slower on the higher time frames. And but really the main takeaway is like there's just so much randomness in the markets, and even if something looks like a signal, it can quickly turn against you. And even if something works in a back test, like regimes change on a dime and you start at zero again. And so really the lesson, the takeaway is like it's really difficult to make money buying risk, and it is a bit less difficult to sell risk. However, with selling risk, you face like edge cases that can blow you out completely. And it's, I think, for me at least, it's easier to conceptualize and control those edge cases rather than looking for that edge and then take risky positions.
Right. No, that makes sense. Do you have a current, like, and I understand it's very difficult to know, but in terms of kind of where we are in the market right now, yeah, it's interesting because, you know, we have a community with like 6,300 pretty smart traders, and there's a broad consensus on a much more bearish time right now. And so despite this kind of move over the last few days that Bitcoin has had, there's a lot of folks predicting much bigger dumps down below. And a lot of that, though, is based on traditional markets as well, that they believe that stock markets, you know, still inflated and that there's going to be more drops, et cetera, et cetera. Do you have thoughts currently on where we are in the market?
I'm really bullish here. I see no reason to be bearish whatsoever. There's like the time to be bearish was at double top test, and I think there's no data in the market that would indicate any reason to be bearish here at the moment. And the main driver at the moment still, I think, is perpetuals. And if you look at the perpetual funding rate and where the risk positions are allocated to, basically all the risk is on the short side at the moment, and it has been since that drawdown on, what was it, from 56,000 down to almost 42,000.
Right.
So past that drop, exactly there, sentiment flipped completely, and the broader market started to short, and so the majority have been heavily short since then. And whenever the majority goes into one direction, it acts as a buffer and kind of mutes the trend slowly, kind of fades it out. And eventually it will stagnate and reverse.
Wow.
And unless there's a lot of leverage, then it will blow out and reverse. But that's kind of a regime change we have seen. Like, we didn't necessarily see a blowout to the top, and we didn't see a blowout to the bottom, right? Because you have more sophisticated leverage and more sophisticated liquidity in the game now that kind of front runs those moves. And so I think like the easiest trade setup at the moment is, well, you have at the bottom range of the previous low of the last sort of intermediary bear phase that was let me check, went down to 30,000 or 29,000.
Right.
And then you have the top range, which is like 60 to 68,000. And I am very convinced we will definitely stay within this range.
Okay.
I don't see us leaving at all.
Nice.
There's way too much short interest at the bottom of the range, and I expect to see a lot of long interest once we approach the top end of the range. And we might see a breakout on the top range test based on, I don't know, some external factors, maybe war in Ukraine or something like that. But if there's no external driver, then I think we're going to chop in this huge range for up to a year, maybe. And that's really going to be a tough time for the majority of traders.
Yeah, because obviously try to trade in a range like that can be very difficult if you don't have if you don't have tools or insights and you're just kind of trying to guess at the swing trade, right? And everyone's a technical analyst these days, so it's interesting to me. So you really rely a lot on what's happening in the perpetuals to inform you what kind of where you see the market is and this range that you're seeing. And that's something that you can really monitor and have an understanding of without, it can give you a longer term thing, like saying that we're going to trade in this range for a year, because it's not something that's changing as rapidly and as with as much volatility as the actual market does.
Yeah, so perpetuals are the main market drivers simply because that's where by far most of the volume happens, right? And you have a lot of the retail leverage that sits under as well, which is also a huge driver in like cascading market moves. And so there's so much information by simply looking at the funding rates, the open interest, and overall like the perpetual volume. And especially if you look back, there's a lot of alpha still left in that signal, and especially on the higher time frames. And so my favorite chart is definitely the 4-hour chart for those kind of like perpetual based directional predictions.
That's awesome, man. I frankly, for me, for the way I kind of do things, I don't mind being in a range for a bit. So that's all good with me, but I'm sure it's going to be frustrating for a lot of market participants for a while with that kind of a prediction. Especially
if they expect breakouts, right? That's going to be by far the most painful when we chop and reverse and never really get any action going, and people love to take breakout risk trades, right? And simply because of that fact that people love to take them means that they are crowded, and whenever a trade is crowded means that there's a market maker with the opposite side positioned somehow, right? And he has a very he's incentivized to push it the other way around so he can de-risk his inventory.
Makes sense.
And that also applies to bigger time frames, bigger ranges, and there are market makers that trade like the 4-hour chart. There's market makers that trade the 1 second chart, and
wow.
and then like each of those market making styles have like different inventory hold periods. And so I'm convinced there's market makers that trade like the daily chart, which basically means, well, they will buy anything below a certain price for the day, and then the following day they will sell everything above a certain price the next day. And what that basically means is that due to those dynamics, you have this push and pull between the risk takers and the risk sellers. And I think when people understand it, really, all of a sudden, the term of like the majority of the market is a majority of the time wrong rings very, very true.
Right.
Because people forget there's always someone on the other side of the trade. And who is that? How much influence do they have? What are their incentives?
Yeah, I think that's something that we all kind of forget about, trying to analyze what the goals of the person on the other side of the trade are, right? I think we tend to think of it in terms of whales or sharks or whatever, retail versus that, but understanding what the people on the other side are trying to do is something we all kind of just blank on and go with our gut, and then end up regretting that. So
yeah, the battle of the emotions. Yeah. It's we always joke about this, Alex. Sometimes I feel like that you go like I will go the opposite of what I think, just because sometimes, when you're sitting there feeling vulnerable and it's like you're not sure which way it's going, and people always, if you're feeling vulnerable, people then start expecting it to go down. And at that point, I think I try to be super careful and check my emotions. And then like, let's think maybe 2 days ago, 3 days ago, everything we saw in the market was all doom and gloom. Every media article, Bitcoin craters, Bitcoin off 55% from all-time high, not saying, oh, Bitcoin up 98% from the beginning of last year, but Bitcoin off 58 from a November 9 high. And it just seems to be just too much sometimes. And when I feel that amount of negativity, that's when I start feeling like it's going to turn the other way, just because of the predominance of that. And, it seems like more often than not, I'm somewhat right. But I think that's the battle is, the gut versus intuition and gut versus emotion versus rationality, in my mind. I don't know. How do you think about that when you're trading?
Well, I think I apply the same principles because the perpetual funding rate often reflects negative or positive news headlines, right? So
Right.
If a very negative social media and very negative press environment surrounds the market, well, there's usually a catalyst. There's one big, very negative headline that starts it all, and then it's a bunch of additional negative headlines that kind of pile onto it and gets shared a lot more than what would usually be the case in a bull market.
Mm-hmm.
Right.
And so you can see those headlines in the funding rate on perpetuals, and you have the catalyst, and then basically the funding rate will continue to stay negative and suppressed, meaning people short, until price reverses and people stop paying attention to negative headlines. It is not that negative headlines stop. It's simply the price turns, negative headline appears to stop having any effect on the price, and then people stop sharing them.
That's interesting.
And so, because if you analyze the frequency of negative headlines, they tend to be very consistent. However, they only gain attention when price falls rather than when price rises. Everyone's like every bull run, you have this wall of worry, right? Where you have people pointing out, well, what about Tether, what about this? What about that? What about this exchange hack? And
Yeah.
then price just keeps going up, and people are in that disbelief, right? And so we all are familiar with that concept, and that goes to show there's an abundance of negative headlines during bull markets, right? But people just can't separate the emotional aspect of it, as you rightfully point out, that all of a sudden when price falls with the negative headlines, then it becomes so much more of an agony, and suddenly they mean something now, right?
Yeah, absolutely.
Almost self-fulfilling in a way, where, you know, I didn't think of that point you made, that when everybody's nervous and scared, or it's dropping, or, you know, that everybody is sharing those headlines, versus just reading them, and it becomes this sort of rising tide of the sky is falling narrative. And then when it turns, the headlines are still there, as you said, and as you also said, people aren't sharing it anymore, so it doesn't become that tsunami effect of negativity. I in the FUD too, you know, a great example. I saw something yesterday, you know, after the U.S. Fed seized that was a Bitfinex wallet hack amount of, you know, anywhere from I've heard 4 billion, I've heard 2.6, anywhere in that range, or 3.6, and then somebody put something out there that goes, oh no, now the Fed can crash the Bitcoin market if they go market sell it all and tank it down to $4,000 of Bitcoin. And then you do the math right away and you realize it can't happen. But then somebody tries to launch that out there, and then people start sharing it. And, you know, if things are going up, then it's like, oh, that's BS. But if things are going down, then everybody weighs that so much more heavily.
Yes. Yeah. Yesterday was really good news for the markets. Really, really good news. And there's two reasons for it. One is markets prefer certainty over uncertainty. So uncertainty is always traded at a premium, meaning that if there's negative uncertainty, the market's going to price in worst case scenario, basically. And if uncertainty is a positive, then it usually overextends. And so this means that those hacked Bitcoins, it's now certain what's going to happen with them, right? We know the Fed is going to go through the process. They're going to go back to Bitfinex, and eventually they will liquidate them. Right. So this is, now we have a certain path for that liquidity, which is, I think, very, very bullish compared to there's some hacker syndicate or a group of hackers trying to launder it, and maybe they slip up and panic and just market dump it all on some like second tier crypto exchange and completely like crash the market. And that uncertainty, I think, was priced in up until that news hit, which is why you saw price dip on the news headline, and then people thought about it, the smart ones, and start buying up the dip, because they're like, what the hell, guys? This is good news, right?
Exactly.
And additionally to that, Tether and Bitfinex are now going to be very, very, very well funded when those Bitcoins return to them. That's like a $4 billion war chest of liquidity that they have available to them, because they're already made whole through their public Leo token fundraising kind of process, right?
Right. So now it's free money.
Exactly. And that's super bullish. That's another $4 billion into the crypto ecosystem.
That's a great point.
That is a very good point.
Yeah, I haven't heard anybody talk of it that way, but that's, you're so right though. Clarity versus uncertainty. And now it's almost like a 2x on the original holdings to them, with, like you said, the Leo thing, and now the return that they can then go put into the market, whether it's in yield farming platforms, DeFi stuff, or, you know, anything else. So that is a good way to think of it.
Yeah. Well, and then we also had a full day of entertainment watching their videos yesterday. So there's that.
Yeah, that was so mind blowing. At first, I couldn't believe like those must be some like fall
guys.
Yeah.
Fall
Patsies.
Guys, exactly.
Patsies, yeah.
And but then digging into it, the girl was like really skilled in social engineering and like seemed to prove to be like reasonably smart people right in that gray zone where you are smart enough to commit smart crimes, but you aren't smart enough to have like the long-term time preference to not want to end up in jail.
Right.
Right.
Exactly.
Yeah.
And by the way, why are you still in the United States? Please.
That's ridiculous. Yeah. It's unbelievable.
I can't even fathom the chutzpah. So anyway, I want the producers of Silicon Valley to produce this in a reality TV comedy drama format, because I think I can't imagine this being done any other way, because these two just priceless material, just absolutely
such a crazy storyline.
Oh my
unbelievable.
God. Yeah. It's incredible. It's amazing. Absolutely amazing. Hey, Julio just said hello, guys. Hey, guys. That's amazing, man. Listen, Alex, we were talking about doing this every other week, but I think it'd be cool to have you back every week. Is that something we could pull off?
Yeah.
Awesome.
I would love to.
Awesome. Well, because I think this is the kind of insights that really can help people make better decisions and understand the things that you guys think about and deal with all the time. And, you can give us updates on how things are going with Eureka. Kind of almost, this experience you're going through of moving from the centralized exchange world to having your foot in this DeFi world and actually building a project, and what it's like building a community and growing it. I think that would be, I think that'll also be really cool for the audience to see and hear.
Absolutely. Yeah.
I would be more than happy to share with you guys my experience going through this building process, because it's such a steep learning curve with pretty much anything crypto, and it's so much fun.
That's awesome. How's the rest of the team coping? Are they doing all right?
They're doing good. Yeah, they're really busy with moderating the Telegram group. We need to focus more on the Discord, and we are getting good progress done on the Avalanche extension. And after that, we will start focusing on Phantom as well.
Awesome.
Yeah.
That's great, man. I'm excited for you. And I think if we can, we try to make it every Wednesday. We get you on the show and talk about the markets a little bit and talk about what's going on with the project. I think that'd be fun.
Absolutely.
Awesome. Yeah. I'd love to. Yeah.
Perfect.
Right, cool.
Well, thanks so much for your time today, man. Best of luck in the next week. We'll talk to you next Wednesday, but really appreciate it. Everybody go to Eureka.finance to take a look at the project and learn more about what they're doing. You can go to the bit.ly I have on screen or click the Medium links at the bottom of the page, and it's Eureka. Alex, have a great afternoon. I'll message you later today with getting your episode out.
Awesome. Thank you for having me.
Yeah, thank you, man. Alex. Pleasure to meet you. Look forward to seeing you regularly.
Thanks. James says great content today, guys. So, maybe we just have Alex do Monday through Friday.
Hold on 1 second. Let me stop my camera. Thanks a lot, Alex. Appreciate it, buddy.
Thanks, buddy.
All right.
Thank you. Bye-bye.
Bye-bye. Oh, that was awesome, man.
Yeah, super cool guy.
Yeah, he really is. Great insights, great experience that he has kind of dealing with these market conditions that, I've listened to people talking about perpetuals being a driver, and I've never taken the time to really dive into it. but I can certainly see how that works. And I love this idea of sentiment and perpetuals combined to help you just kind of make broader general decisions about where the market is and where people are and how they're feeling, right? I mean,
Yeah.
something as simple as seeing the shorts build up is a really great indicator. That was
But
awesome.
what was really interesting is he was saying the shorts building up below the current pricing, so way down below.
Yeah,
So I
yeah.
think he's probably talking about a lot of shorts in the sub 40 range, 35.
Yeah, probably the 30s. Yeah.
Because, when I used to, anything you buy in calls or puts, when you go way out of the range or out of the money, the prices are incredibly low.
Yeah.
So they're probably, and that's kind of what a lot of, I don't know how to put it the right way, retail traders would do, is because you go, oh my God, I can get a control of, 100,000 BTC for, $50. But of course the strike price is like, $10 or something like that. And so, it's not going to happen. But I think what's happening is that he said people are really shorting below the strike price. And then when it goes the other way, you're losing money fast.
Yeah.
And you've got to close those out. And then you're trying to reload. And, that's when you start getting into those accelerations around short squeezes and things like that, that moves it so fast in the other direction. So that's something I hadn't looked at yet was, the shorts significantly below, it sounds like probably 1 or 2 standard deviations below the current price.
Yeah.
That's a great indicator.
Really is. And, it's interesting because we pull some of that data in material indicators, but I'm not sure that we've ever thought about that perspective. So I really want to look at that more closely. And, wow, that was great. I'm also really looking forward kind of getting a weekly update from him on what they're experiencing building Eureka. I think it's a cool concept, and I like the project, and I like him, and I like the approach, right? And I don't think he's somebody that will ever give in to kind of the, rush it and hype it point of view of running a project. He's just going to build, and he's just going to do it on the schedule that they plan to have, and not worry too much about the outside pressure.
Yeah. Well, it seems to me, my read is that he doesn't get dragged into the emotion of things. He just, as we know, you have to do that to stay sane in that space.
Yep.
And it's probably carried over into how he runs Eureka.
Exactly.
So he's not going to go manic one day and then, throw in the towel the next. He's just going steady, stable, grow at a reasonable rate. Don't lose your stack, as I always say, and just keep plodding upward.
Yeah.
Which is what you really want, because everybody that goes for those big gains, you get wiped out eventually.
Yep.
All the guys that have done really well this cycle that I've talked to, like one in particular that turned 250 grand January 20th to $57 million as of say May earlier this year. I mean, he's still got a bunch of money, but obviously he's off a tiny bit. They all got wiped out. In 17 or 18 or 2013 or something like that, whenever the one before that was, and they just take what they learn and they come back. So if you can avoid getting wiped out, really pressing when you're toppy, then you make it in the next cycle big time. So what is it, like the tortoise and the hare story? It's like, go for the gains, small gains, any gains, incremental gains. It's not a sprint, it's a marathon.
Absolutely.
So, excellent, brilliant guy. Good. I look forward to getting to know him better. And, with Eureka, too. Price is right, guys. NFA and all that. But look, there's decent yields there. You can see he's smart, knows what he's doing. Yep. And he's not really shilling it or marketing it. His Telegram channel has 16,000 people in it, I think. I just was in there.
Well, that's because he's doing the entire distribution as an airdrop, and he's doing it geographically one by one, right? So everybody's come into the Telegram. So everything has been airdrop. Like he now on PancakeSwap you can buy, and he dumped a bunch of supply in there, but he's really wanting this to be kind of a not democratic, but
fully decentralized, egalitarian.
Egalitarian is the word I was looking for. approach to distributing this. He wants a lot of wallets. He saw this big concentration in one part of it's in the interview that I'll be posting this afternoon. He saw a lot of concentration in one part of the world, and he started blocking that part of the world from the airdrop, and then decided to slowly roll out geographically every airdrop. So that's what he's been doing for the last several weeks, is little by little by little by little, because he wants a global distribution and he wants as many wallets as possible. And that's smart strategically, and it's in the spirit of kind of DeFi. So I like the approach.
Well, and it gives everybody a little, in a lot of countries, I don't want to use the wrong word, but say less advantaged, not first world industrialized societies. A lot of the, up and comers where, $20 a week is a lot of money.
Right.
It gives them a little stake to play with.
Yep.
To start building a portfolio.
Yeah.
And that's that's the type of thing that changes the world.
Absolutely.
And banks the world. So very
definitely.
Cool.
Hey, listen, I'm going to save all this my rant about the billionaire for tomorrow. I've got a lot of other things queued up on that. So,
cool.
And I'm sure there'll be more news on this guy by tomorrow. So
is he coming on the show tomorrow?
You know what? Now I'm going to DM him. I'm going to DM him and ask if he wants to come on.
Let's invite him, man. And then we can show the message if he declines or blocks you at that point. But remember, don't rant in the message to him, obviously.
No.
Hey, man, we just want to hear your side of the story.
Curious about what's going on. Yeah, exactly. Slimy reporter stuff. Yeah.
All right, buddy.
All right, Ben. Have a great day. Thank you, everybody, for listening. I hope you enjoyed it. If you did, please let your friends and family know about the show, and please rate and review us when you get a chance. It only takes 30 seconds to click those stars and tell people that you like the show. We would greatly appreciate it. I hope everyone has a lovely day, and we'll talk to you tomorrow.
Yeah. Have a great day, everyone. Thanks, Brad.
Thanks, Ben.
Talk to you soon. Bye-bye.
Bye-bye.